So just to start with a brief background of Xceed. So Xceed is a company that formed in 2003. We're a fast-growing IT professional services firm. We're based with our head office in London, but also have offices in Edinburgh and New York. So our predominantly focus of industry is within the financial services, but we also work across telecoms, media, and energy sectors. Our skills are focused on technology consulting, everything from IT infrastructure through to application integration and business change. But all of these services are really underpinned by a strong project and program management capability. So before we dive into the detail of the session, just a bit of housekeeping. So in terms of the audio, so everyone on the phone is actually muted apart from the presenters. But we will be recording the session, and we will be sending out a link to this after the webinar today. In terms of questions that you have, please do post any questions in the Join Me chat window, and we will look to answer those at the Q&A section at the end. If you have any challenges with any of the software or with the audio, then please do just drop an email to itsupport@xceedgroup.com, and we'll look to resolve those for you. So just a way of introduction to ourselves. So I'm McDaniel. I'm a senior managing consultant at Xceed. I have over 10 years experience as an enterprise architect and lots of experience in data architecture specifically. And having worked both at Xceed and also previously within Deloitte Consulting. So I'll now just pass you over to Paul for a brief introduction.
Thanks, Graham. My name is Paul Coffey. I'm an enterprise data architect. I've done a lot of work in the banking industry across various banks within the UK and also in New Zealand. And I'm looking forward to having this conversation about data.
Great, thanks. So we're going to kick off now, and I'm going to pass back to Paul to cover the first section, so looking beyond the big data hype.
Okay, thanks very much, Graham. So first of all, I want to talk a little bit about the kind of driver for this and for the work that we've been doing here. And I'm assuming that everybody on the call is aware of the BCBS 239 risk data aggregation principles. So this was a paper that was issued in 2013, towards the end of 2013, and is, as far as we're concerned, is pretty much the Bible for the way that we work with this. Now, the 239 is particularly for the GSIBs, the globally systemically important banks, is something that they need to be compliant with by the end of 2015. And there is absolutely no indication at all from the regulator that it's going to stop there. So they're going to start looking at the domestic systemically important banks. They're also going to start looking at the systemically important financial institutions. So the regulator, the way they're working at the moment, is just more regulation coming down the line. Personally, we like the data aggregation principles because it's a good push for the work that needs to be done. From a personal point of view, I'm not very fond of the title because in the experience I've had over the last few years, what I've found is that the risk department use pretty much every piece of data in a bank. So from my point of view, it's data aggregation as opposed to just risk data aggregation. But what I also want to do is talk about a little bit about the what's happening in the industry at the moment. So as many of us will know, if you come from a technical background, is that the technology industry is very, very good at coming up with a new smart, shiny thing every couple of years. And the big, smart, shiny thing in the world at the moment is this thing called big data. So the way that we can look at it is that you can have a thing called big data, but you really need to understand small data first. We're going to talk about that soon. And if you can understand the small data and you can understand what big data is, you can actually mature onto doing what we would call smart data thinking. Once you can understand that and you can put a bit of context around that, you can then start thinking about what are the kind of smart solutions that you can bring in. There are a number of things that are available on the market at the moment which could actually make your data, your use and your management of data much better. They don't have to be particularly big programs of work, but there's capabilities out there, and we'll discuss them a little bit as well. And of course, what we want to also talk about is to reiterate something that appears in the BCBS 239 document, but which some people have missed, is that The regulator is actually telling you that if you follow the principles, then you will have increased profitability. And it's not often that the regulator actually tells you that you're going to make more money. Okay. So anyway, the kind of key points about this is that in order to use big data, you need to have a big data mindset, and you need to understand your small data. The concept of big data is here. It's going to be. It's not going to go away. It's something that can be very, very beneficial if you understand what big data means and how you can use it. And there are some quite innovative technology tool sets that are available at the moment that we partner with, and we're going to try and talk through how they can help you meet your regulatory challenges, but also start working on some of the business opportunities that you can have. However, in order for us to do that, what we need to do is just to have a slightly different way of thinking. And the way I like to deal with this, first of all, is to use one of my favorite quotes from Albert Einstein. And what it says is that we cannot solve our problems with the same thinking we used when we created them. Okay. Now, one of the main issues that we find in financial services organizations at the moment is that there's very much siloed thinking, siloed departments, siloed programs of work that don't necessarily actually achieve what it is that they're out to do. So if you're going to try and do data management or data governance but use the same thinking, you're just going to get the same problem again. So we really want to try and think about this a slightly different way. And the way that we do this at the beginning is that we start kind of using a data model. So we've got what we've got on the screen there is a conceptual data model. That's the one that we use. What we've found over the years is this fits any kind of financial services organisation. But there's a couple of concepts that I want to talk about first off. Is to understand first of all the breadth of data that you use as an organisation, which is very different from the depth of data that you have. Okay. When people talk about big data, they're talking about adding breadth to the data that you use. They're not talking about adding depth. Okay, so if we're allowed to start thinking about what small data is, so small data is very much what you use at the moment, the data that is within your organization at the moment that helps you to operate as you are. Okay, that's my definition of small data. Big data is when you're adding breadth. Okay, and now that breadth in most cases will be data that's external to you. However, as many of us I think on the call will understand, data warehousing in banking has never been a particularly successful thing. But sometimes the big data concepts you might be talking about will be data that's already in your organization, but which you haven't connected together. And in particular, in the kind of party area up here, what we find, is that pretty much every platform within a bank has the concept of bringing in party data, but then not joining together later on in order to generate some value. Okay, most financial organizations are very much product-based. They like to say that they're customer-based, but they're actually product-based, and this is what we find when we're in the landscape. Okay. Okay, so one of the things we want to do with as far as the organizational data landscapes is to understand what the landscape is. Now, there's a kind of a misnomer that's been around for some time, which is many people in the business area will look to the technology department to help them with data, okay, because the data exists on technology plan systems. Okay, so you have an IT systems landscape which gathers and processes information. Okay, but what you also have is you have an EUC landscape. So EUC is end user computing. It's the spreadsheets and the databases that are created by business users, and they're there for very, very specific and very, very good reasons. But it's a landscape which is, I think, Graham, we would call the Wild West.
That's correct. I mean, it's very difficult to really establish the extent of that landscape when often the EUCs, just sitting independently on network drives or local machines. So, I mean, there's opportunity here to use, some smart technology to really identify the extent of that landscape, apply an understanding of the risk associated to individual EUCs, which may be used for regulatory reporting, for instance, and really put good governance and controls around those high-priority EUCs. So it's all about understanding that full data landscape.
It is, yeah, and actually, the first time that you look at that full data landscape, I think is what we would call the big scary picture, and we'll show you an example of that big scary picture later on. Okay. So in understanding the landscape that you have the ability to affect change much better. So most banks have a kind of run the bank area, they have a change the bank area, but it's very difficult to change something if you don't understand actually what's going on. Okay. So what we want to do is we want to look at what would be an ideal scenario, which is like a typical customer journey, and we'll just look at that now. So what you can see on the screen here is quite a pretty little view of how a bank operates, and it's the way that we kind of see the world. So data comes in from the left and it moves through the organization until eventually it gets to the end point. It's obviously a very simplistic view of this, but if you look on the left-hand side in the application area, what we've got the areas of KYC, KYB, AML, FATCA, enhanced due diligence, countering the financing of terrorism, and we've got a kind of CRM module as well. And this is all this kind of application phase where the organisation is thinking of getting into a deal with whether it be a retail customer or whether it be a corporate customer. Now, as you look down here, what you'll find, and this is where I think the regulator is kind of missing a trick here, is that we'll find if you look at KYC, KYB, AML, and FATCA, is that they're telling you that you need to increase your capability in that area. But curiously enough, the data that you're gathering, the information that you're gathering, the checking that you're doing, is actually the same pretty much across all of these. And I think there's a kind of 90% crossover in all of these. But what we often find within organisations is that you have an AML program, you'll have a KYC program, you'll have a FATCA program, often kind of working across each other, So the client onboarding element here, what we want to kind of introduce here is this kind of the big data idea, where you can look to use external data sets to help you with all of these, to use good information to make good business decisions, but also to give yourself the opportunity of bringing in good quality data that represents the clients and the complex relationships that they have. Okay. As we're moving from left to right, you can see we're going to the sales and service area, and what we've listed there are a number of the what we call fairly common products that the banks provide. Quite often, I think what you'll find in here is that any bank won't offer all of these, but there'll be a mixture. The account remediation and support element is where sometimes deals don't go well, and this is kind of days past due element, which has an impact on the risk figures. And from a personal point of view, I see this data consolidation area happening far too late in the life cycle. This consolidation, from my point of view, should be happening way over on the left-hand side, but the reality is it happens too late in the life cycle for us. And then we get into the point where we're generating management information, and you can call it management information, you can call it analytics. And from there, what we're doing is we're moving into the external provision. This is where you have to tell the regulator and you have to tell the markets, the total exposures that you have. So there's capital adequacy, could be liquidity, could be RWA calculations, and also got the CoRep and FinRep and MiFID as well. So one of the offerings that we're talking about here is the credit risk analytics. In understanding the full landscape, the full scale of the data that you have, it's very easy to, it's much easier then to design a consolidated credit risk platform, which means that you can do this risk data aggregation much quicker. If we go back into the BCBS paper, we're talking about doing this in times of stress on a daily basis or on an hourly basis. And we know that many of the clients that we've talked to, Graham, they struggle with this to do it within days or weeks. Indeed, yeah. Mm-hmm. Okay, so that's quite a nice view of the landscape of how data moves through an organisation. There's obviously some loops in there that you would expect. Obviously, we haven't represented them there here. But what I want to do now is I want to just have a quick reminder, if we go into our conceptual data model again, again talking about the breadth and the depth. Now, when we're looking at the data content of a platform, of the landscape, we would use this model as an overlay to try and work it out. And then we have what we would call the reality. Okay, so the picture that you can see on the right-hand side of the screen there is one that was drawn up by myself recently in doing this type of work within a bank. Now that started as an A3 and it ended up being a AA0. And this is an example of what I would call the big scary picture that we talked about earlier on. And it was a bit of a shock to us when we did it. It was a bit of a shock to the people who asked us to do it, and it was an even bigger shock to the IT people, because this was a view of the technical landscape and the EUC landscape that they weren't aware of. And as you can see, what we have on there, there's lots of lines. Now, obviously, I can't show you the detail of that because we do not have a screen big enough to do that. But every line there is a movement of data. And every time you move data, you have to have a reconciliation control framework, and you've got there is the opportunity for something to go wrong. Okay, so when we talk, one of the propositions that we're talking about doing at the moment is a data landscape simplification. In order for you to simplify your landscape, you need to understand what it is. Okay, that picture there was also very handy in developing what we would call a smart data migration technique, and this is the ability to understand what the upstream and downstream impacts were, but also to have a think about where in the organization is the data that you want to migrate, and where is it perhaps of a better quality, where should you be referencing it, or perhaps you should be checking it. So that's a very good example there of what we would say big scary picture. So if we're going to talk about the kind of typical organizational challenges that we have at the moment, I think this will be, I imagine for many people on the call, you'll understand this. Okay. So we've got the duplication of data repositories and applications. If you think back there to that picture that we showed, what it gives is the illusion that organizations have lots of data, but the reality is they've got lots of systems, and what they do is they move data between them. With every movement of data, you're going to lose confidence in the reporting because you're not so sure that the quality of the data and whether it's fully been transferred, where data points are being added, particularly from the EUC landscape. You know, with Graham, when we talked about the RWA, the long-running view into an RWA, that the amount of data that gets added from various spreadsheets as we go along. As we do that, the EUCs are created because of manual remediation work. There's an ever-increasing level of that. The EUC landscape, by inference, as we mentioned, is pretty much the Wild West. It's uncontrolled, it's ungoverned, and the landscape isn't known. And then, of course, when we move into the concepts of data governance, we don't really have the data ownership. And if we don't have the ownership of the data and the understanding of the ownership of the data, what we're finding is that it's difficult to make decisions about whether data is of the right quality or not, because you're not quite sure who owns it. And if the person who owns it comes up with the rules, are the rules being steadily applied as we move through the organization? So this lack of data governance, which is something which is pushed by BCBS 239, means that sometimes the thinking and the implementation of a data governance model can be hampered. Now, it turns out in using that conceptual data model that we have there, what we're effectively doing when we look at the systems, we're looking at a structured data world. Okay. Now, some recent studies have kind of found that a lot of the data content within an organization is actually within unstructured data. There are some tool sets available at the moment that we've been working with recently, which have the ability to release a lot of the data from the unstructured world, which is the ability to scan in documents, to put it into a repository, to be able to connect it to the structured data that you have in your platforms that you can use to develop really good customer and marketing insight, but also for fraud investigations, for anti-money laundering, for the terrorism work, and for the enhanced due diligence. So there are some really good capabilities out there in the world at the moment which can help you to join your data together. Okay. I just want to kind of a couple of points there towards the end is that, again, in 239, they demand that the organization has a full end-to-end view of the data that supports risk management and decisions, and organizations have a complete and comprehensive data dictionary or taxonomy. So if anybody has any questions, if you could pass them through, that would be very good. So Graham, we were talking about this a little bit earlier on. One of the obvious questions that came up is this just a risk thing?
Well, it's certainly much broader than risk, and I mean, as we mentioned, the BCBS paper, it's titled Risk Data Aggregation, but the thing is that the data that's used by risk covers the breadth of the organisation. So what the BCBS paper is actually doing is bringing data up to the board level. So now you're starting to see that CDOs are being appointed into the banking organisations, and that's really taking that top-level view of the data that sits across all of the business units across the organisation and starting to apply the appropriate governance in order to meet the principles of the BCBS paper.
Yeah, it's true. I mean, one of the things that we've noticed is so for instance, our view is that credit risk and marketing are the two biggest users of data within an organisation. Generally speaking, they don't actually produce a great deal. They produce some aggregated figures, but they use a huge amount of data. And yet there's such a big crossover between what they do and what finance do. So we've got a question also about how can you coordinate this kind of data discovery across currently active work or change programs. Okay, so there's a couple of bits to that. So doing the data discovery, the landscape discovery, is a relatively simple task to do. It's something that has been done manually by us quite a lot. We now have some access to tool sets to actually automate a lot of this, which is very good. But that's kind of the first answer. So developing that landscape can be quite easy, and it can be quite unobtrusive. It doesn't actually impact any programs, but it does give you a better view of what's happening. However, I think the more important part of that question is how do you coordinate data and data governance across currently active programs? Well, the way that the world is at the moment, particularly in the banking industry, you're looking at kind of two areas. One is your kind of enterprise design authority, if you have one, and the other one is your IT design authority, if you have one. Now, I suspect most do have an IT design authority. This will tend to concentrate on the applications area, the information security area, and also the infrastructure area. The level to which the data architecture is specified in a comprehensive set of requirements by the business, and whether that's translated into kind of technical solutions, is somewhat dubious at the moment. But through a kind of data governance framework, you're possible to link what the work that data governance is looking to do with your enterprise program management office, and also with your IT pipeline. But your IT pipeline is pretty much based on your investment pipeline. So how do you want to do the investment pipeline and have that structured in such a way that data and information has been thought of earlier? It comes down to the idea of having a strong active governance framework.
So there's another question that we just got through here. So Paul, how does this help with improving governance in an organisation?
So at the moment there is lots of governance going on within organisations, but to me it all seems to be missing the point, because if I take the very simple view that an organisation is made up of three things, so for instance people, process and data, what organisations do is they manage their people. They overmanage their process. You find that there's many processes there which are basically checking and confirming a piece of data is correct, but they don't manage the data. So the way that we have looked to implement data governance in some of our clients is to be able to put it way at the forefront, so that I think we could talk about the enterprise architecture view, is that we have our level 0 business opportunity, challenge or problem, level 1, which is kind of outline solution requirement, is to have the data thought of at that requirement level, and so that we can pass that into the solution level. I think also what you've got to do is you've got to recognise that the way to do this is probably it's better to be pragmatic and to understand that in any organisation there are a number of currently active programs which I think you can influence, but you probably don't want to stop. But I think that there is an evolution there. But if you're not doing data governance, you're never going to have the opportunity to be able to try and make this better. And certainly, also, what it says within BCBS 239 is that you have to really up the game on data architecture. And then also in that recent survey that went through a number of the large banks around the world, is that the bit that they were worst on was data governance and architecture. So they really need to lift the game on that.
Okay, great. So there's another question there. So how do you prevent the same issues growing again once you've gone through the effort of discovering your data landscape?
Brilliant question, and yes, a very good experience of that. We did mention earlier on it was called the big scary picture. When we drew that picture at recently our clients, what it did, it changed a lot of the thinking about what was happening, because it made it clear to everybody what the landscape was. The only way that you can, the two things that you need to do in order to make that better, one is to have a kind of data governance happening, but more immediately you need to have some EUC governance, so building an EUC register. So every spreadsheet or database that's being used, you need to investigate to find out why it's there. There must be a reason why it's there. There must be something that it does that's very, very important. Okay. What you'll find is two things. One, as you gather that together, you're actually gathering together a bigger and better set of requirements for how the bank is operating. Two, what you also find is you find duplication of effort. You know, I've seen situations in clients where we have three departments or groups of people who are actually doing the same thing. So if you use the landscape as a starter and you use it then to govern against, you have an opportunity of doing it.
And you're looking to reduce the complexity, remove applications, improve process so that it doesn't reoccur, essentially.
Yes, there's so many things you can do here. So if you've again, using the enterprise architecture view, if you had a capability reference architecture, so for instance, you might say you want to offer revolving credit. which is a business requirement, so something you want to do. And then you look and you find you've got 7 credit card platforms. And you also know that you're doing credit risk on those 7 just off those 7 credit card platforms. So okay, we know we want to offer revolving credit. Why do we have 7? If we start switching some of these off and migrating and decommissioning, we're simplifying the landscape. We're saving money. We're saving processing time. And again, when you move into the EUC world, where people are using spreadsheets to do this kind of aggregation, if you're starting to understand what it is that they're doing, so you can more industrialize that process back into a kind of IT supported environment. You've got the ability to start not using these EUCs anymore, but have the same function done, but on a more robust platform.
Okay, great. So I think we've got time for one last question that's come through. So data aggregation is just one part, as is data discovery and BI. But how do we recommend enabling end users to have enterprise-wide interactive analytical capability?
Great question. I love this. So I would point you back towards the conceptual data model, because that shows you very clearly what it is, the data that you actually use. Now, I don't know about everybody on the call, but Graham and I have had a lot of experience over the years in watching data warehouse and analytics programs take multiple years, spend tens, hundreds of millions of pounds and not really delivering anything. And that's really because there's a lack of understanding about what a data warehouse is. So if you understand the data that you actually use, you can use the conceptual data model as a real enabler to say this is the type of data that we're talking about. By looking at your landscape and using that conceptual model as an overlay on each of the platforms and your operational world, your core banking, your personal loans, your mortgages, your deposits, your savings, your asset finance, invoice finance, that type of thing. You can find very, very quickly what the data content is, and therefore what the data warehouse design is going to look like. I think what happens in too many data warehouse programs is there's too much time spent thinking about the technical solution, and going down rabbit warrens with getting very specific about the tool sets that you're going to use, without actually understanding that if you bring the data together into one warehouse, you can then give proper self-service analytical capability. But I've seen more failures than I've seen successes.
Okay, great. Thanks, Paul. So I think the time's now really coming to a close. So I think I'm going to have to wrap up the session here. But in the meantime, if you have any further questions that you wanted to ask, then please do contact myself or Paul directly, and we will certainly be happy to answer those for you. And really, I just want to thank you all for joining the session today. I do hope that you found it useful, and certainly look forward to meeting you again online at future Xceed webinars. So thanks very much, and good afternoon.
Thank you. Good afternoon.